Okay, so we are going to quickly start with today's session, today's webinar. Mainly, this webinar is to give you an idea how to discuss the first question, how to solve the first question, because I have already provided with the recap videos. So we are not going to do the complete recap of APM. Rather, we will just focus on how to attempt the first question in today's session and how to attempt section B. I mean, we will try our level best to do two questions tomorrow, hopefully. So in today's session, we are going to discuss the first question, right? So there are a few concepts which I quickly would like to brush up so that you can have an idea how to attempt question number one, right? See, whenever the question number one generally asks students to evaluate the performance measurement report, right? And whenever you are there to evaluate the report, you must understand that you should look at what is given in the question. Like for example, there will be a mission statement of the company. There will be a long-term objectives of company. There can be some stakeholder requirement from the company. There can be some problems which are continuing with the company, or there can be something else like government related issues, or there can be something else which is important for the company. So what you need to do is when you are reading the question, when you are reading the scenario, you need to pick those problems, those issues, those uh, those problems, and then you need to understand, you need to figure out whether all these things are given in the performance measurement report. So that's basically simple term evaluation. What do you mean by evaluation, right? Whenever we say evaluate, that means first of all, you need to identify what is given in the report, right? Analyze whatever is given in the report is correct or incorrect, appropriate or inappropriate. If you think it's correct, you have to tell the examiner that whatever is given in the report is correct, right? And when you see the report, and if you are unable, and if you're seeing anything which is wrongly measured. Let's suppose the company wants to focus on the quality of the product and nothing and the report is not there's no quality perspective is included in the report, or a wrong quality perspective is included in the report. In that case, you need to identify that why you think that this is incorrect, right? And then you can recommend something. And if you are unable to locate anything in the report, you need to identify that as well. So that is generally what we mean by the evaluation of the report. So there are 70-80% chances that you will find this requirement in the first part of APM paper, because mostly it's evaluation of performance measurement report with the different requirements, with the different issues, and so that's basically the first part which we are going to discuss. So um, there are two things how you are supposed to look at the report. The first one is the presentation side. Presentation in the sense when you are looking at the report, you must understand that there is a way to present the report, right? The report should not be too lengthy. The report should not be too short. The report should contain all the relevant KPIs. The report should be easy to understand, right? These are few things which are important because your audience of the report is generally your CEO. So you cannot present a long, lengthy report, right? Too much information, too little information, both are not good. If your report should not contain operational information, because operational details mean that these are few things which are not required by the CEO. So if you are seeing a strategic report where operational information is mentioned, you need to highlight it, right? Then layout must help users to understand the information. Like for example, there are few KPIs which are the most important. Like company wants to focus on the maximization of resource utilization. That's among one of the objective of company. So resource utilization is something which should be present at the starting of the report. If you are reporting resource utilization at the end of the report, it will not serve the purpose because the presentation is not good. You generally like to look at the most required figures at first glance, right? So that's the most important thing. You can include trends, you can include graphs, you can include table in order to summarize information. If there's something, I won't say wrong, but if there is a change in your report, like for example, in the last few years, there has been a massive decline in the profitability of the company, you need to explain your narrative that why that happened, right? Or for example, from last year, from last 2 years, company is not measuring the customer feedback, so you need to write a reason behind it, right? So any change or any significant change should be explained by the narrative. So you need to understand the report, what is given there, and you should try to understand whether there is a massive change or there is a significant change in the report. And if you think that the examiner, because see, whenever you see a report, if everything is same as of previous years, you will not be curious about it. But if you are seeing that, okay, fine, last year, 2020 GP was 20%, 21 GP was 20%, 22 GP was 23%, 23 to 2023 GP was around 14%. So why there is a sudden decline in gross profit? Definitely, I will ask the present, I will ask the management to explain this reason to me, right? So that should be the part of your strategic report, right? And then level of precision is important. Sometimes this can also be addressed, right? The technical side is that you need to understand what is the overall mission statement of the organization. You need to understand whether the any change, problem, or request by the stakeholder is presented in the question in the report. If there is any important information which is missing from the report, you need to highlight that. And your report must match the purpose of the performance measurement. That you should understand why you are supposed to write the report, and your report should be accordingly. Okay. Then financial perspective and non-financial perspective both should be mentioned in the report. If your report only contains financial information, that means you are biased towards financial information, which is easier to manipulate. Non-financial information are not that easy to manipulate. So that should be a combination of financial and non-financial perspectives both, right? Like we have studied in balance scorecard, like we have studied in six building block model, like we have studied in performance prism. Everywhere you will find a combination of financial and non-financial perspective. Mostly there are situations when there are more non-financial perspective than financial perspective. So that's the most important thing. And if you are seeing mostly financial perspective, that means if the company can be short term, company is focusing on the short term indicators like profitability. Or you can see, if you are seeing in a report that the company is focusing mostly on indicators like cost cutting, like reduction in the training costs or something like that, you need to criticize that part. Okay, that some other relevant KPIs can be used. Like in return on capital employed is generally an indicator where we generally criticize that ROCE means that the company is focusing on accounting profits, right? And accounting profits are something uh, which will not allow managers to do uh, heavy expenditures, because let's suppose you are spending 5 million in advertisement expenditure. So accounting standards will not allow you to capitalize that advertisement expenditure in case its benefit will arise for the next 3 years. Economic value added can do so, right? So return on capital employed, if I'm the manager, if I'm using ROC and I'm doing 5 million advertisement expenditure, maybe I will not be motivated to do that, because I know that this is going to reduce my profitability, reduce the ROC, and reduce my chances to get the bonuses, right? That is something which we call short-term performance indicator. If the company is having multiple divisions, you may want them to give you, and your report should give an idea which division has actually performed well, and because of which division the company couldn't perform well, right? So these are few generalized things which you should look at whenever you are looking at the strategic report, right? So now we are going to do two things in the next question. The first thing is obviously the strategic report, and the second one is we will do a transfer pricing question. And then there is another question which I will do at the end of the report of today's session, which is the section B, which is a bit easier, but still there can be some problems with that. So this is basically the sequence, what we will be doing in today's session, and I hope it has been synchronized. Yes, it should be. Yeah. So this is basically a Medi company which has been examined, I think, in December 2022. And it's a good question because it has a lot of things to be discussed with respect to performance measurement report. So let's see what requirements we have in the performance measurement report. Requirement is quite simple. The first requirement is of 14 marks, right? 14 marks are too much, and you are supposed to write a report to responsible instruction for work on the following areas. The first one is performance report, that is for 14 marks, which are too much, right? And then you have to discuss minimum performance level cleanliness, and that is for approximately 18 marks, more than the first one. And the last one is transfer pricing, that is for 8 marks, and then there are 10 marks for all these professional marks, right? So if you see this requirement, you will find nothing. You won't be able to identify what is actually the requirement. So that's basically the problem of APM. You need to go back to the question and need to look what is basically the requirement, right? So let's start with the question. Let's see what we can do here. Okay. So okay. Okay. So Medi is a fast food chain which operates restaurants in several locations, right? It was established by the current board members who all are the shareholders. So the current board members are also the shareholders. When they opened the first Medi restaurant in 2002, right? The restaurant quickly gained a good reputation through positive customer reviews on social media for the quality and price of its food and for its customer service and for its cleanliness, right? So they have identified few reasons why the restaurant is popular, because the customers were satisfied with respect to the quality of the product, with respect to the quality and the price of its foods, and for its customer service and for its cleanliness. So there are four factors because of which this restaurant is quite popular, right? Gained the popularity. Since then, Medi has grown quickly. By August 20x5, so we started our business in 20x2. By 20x5, it had opened another 12 restaurants under the Medi brand with the same overall business model. So what is the business model that we have to look at? Same business model, product range, and look and feel as the original restaurant. Okay. Medi's overall objective is to maximize shareholder wealth, right? To achieve this overall objective, Medi has two supporting aims. The first aim is to increase the number of restaurants, right? And Medi has ambitious growth objectives to increase the number of restaurants, including franchise restaurants. Though Medi is a successful business, the lack of available finance has meant that the rate of opening its new restaurant has recently slowed. So you need to understand. Do you think it's a problem for the company? Do you think it's a problem for the company? See, the company's objective is to increase the number of restaurants, right? And the company um, is successful in doing that. But the problem with the company is having these days is the lack of finance availability, right? So that means this is something which should be the part of your strategic report. Why? because this is something where the company is struggling. So this is not your objective. This is not your long-term objective, but this is something where the company is struggling. So you should tell your shareholder whether the company has enough finances available or not, right, to purchase to acquire a restaurant. Okay, to achieve like for like revenue growth of at least 15% each year, right? So like to like revenue growth of at least 15% each year. This is the second objective. The board believe that a key factor in achieving this for Medi is to achieve industry leading performance across a range of factors relating to quality of services. So they believe that this can be uh, achieved by using the quality of services, right? Uh, so this means what? This means that the quality of service is another thing which should be the part of your strategic report. So what factors we have identified? The first thing which we need to identify is the company wants to maximize shareholder wealth, right? So if this is the case, then that means company, sorry, if this is the case, then this should be the part of your strategic report, right? Number one. Number two, the company wants to increase the number of restaurants. So this should also be the part of your strategic report, right? This is the problem. This is not the objective, but this is the problem. This should also be measured in your strategic report because if you don't have finance available, you won't be able to achieve the objective, right? Okay. Then at least 15% a year, right? So 15% is the fourth thing which should be present in your report. And the board believes that a key factor in achieving this is for Medi to achieve industry leading performance across a range of factors relating to the quality of service. The quality of service is the fifth probably KPI which should be, I mean CSI, which should be available in your performance measurement report. So these are few things which must be the part of your strategic performance report. Okay, they are explaining what do you mean by like to like. Like to like revenue growth is achieved by means of other than growth due to the opening of new restaurants and exclude growth from other one-off events which may distort the measurement of the performance. So that makes sense. If the company is having some cash flows because the company sold some equipment or something, we are not supposed to include that in the analysis, right? So this is the first part of the overall objective and everything which is given in the company's information, right? In order to help achieve its overall objective, right? What is the overall objective? Overall objective is to maximize shareholder value. And how they are supposed to do that? They will maximize the shareholder value by using all these things, right? So that's the overall objective. So in order to help to achieve its overall objective, Medi has recently established 8 franchise restaurants consistent with the first supporting aim to increase the number of restaurants, including the franchise restaurants. Right. One of these franchise restaurants is located in neighboring country where the Medi brand is not widely recognized. So this is another new thing for the company. Each franchise is owned and managed by the franchisee and is operated as a business which is totally separate from Medi. The franchisee pay franchise fee to Medi, right? They are paying the franchise fee to Medi, and in return is able to trade under the Medi's brand, which is a normal case in case of franchises. All food items, cooking equipment, fixtures and fittings, and marketing materials are provided to the franchisee by Medi to the extent that from the customer's point of view, a franchise restaurant in the industry is indistinguishable from one owned by the Medi. The franchise fee paid by the franchise to Medi have to elevate. So it's getting confusing. So let me try to mark few things. The first part, this till this, examiner is telling you what are the objectives, right? What are the objectives? And from this part, they are telling you the details of franchise. And this is basically the operational details of franchise, right? Which suggests what? Which suggests that the franchisee pay, or just they are paying a fee to Medi and they are trading under Medi branding, right? And then they are supposed to buy food items, cooking equipment, and everything from Medi, so the customer cannot distinguish which is company's restaurant and which is the franchise. Now, the franchise fee paid by the franchisee to Medi have two elements. So now what they are trying to explain is the fee which is paid by the restaurant, right? Fee which is paid by franchise. So now they are moving towards that direction. So it's a complete different discussion, but again, you have to understand what they are saying so that we can try to uh, report in case we figured out something fishy. A one-off setup fee, a one-off setup fee which varies in amount according to the size of new franchise. So maybe if the franchise is a small franchise, we can have a small amount of payment. If the franchisee is a huge one, we have to pay the higher amount. This covers the cost of fixtures, fittings, and equipment, as well as the staff training and initial marketing of the new restaurants in the local press and online using social media and pay per click, right? So these are some things which the company will get, right? For some of the new franchisees, the setup costs incurred by Medi have exceeded the setup fee agreed with the franchisee. Now, this is a problem. This is actually a problem. And the board is keen to ensure that this does not happen in future. This does not happen in future, right? So this is a problem which the company is facing, and with respect to setup fee. The second one is an ongoing fee of 10% of the revenue, which is paid to Medi in return of the provision of an extensive IT infrastructure, continuing IT marketing support, and license to trade under Medi's brand, right? So the first part, in the first part, they were providing cost of fixtures, fittings, and equipment, right? As well as staff training and initial marketing of the new restaurants, right? And in the second part, they are paying a recurring fee of 10%, and in return, they will get extensive IT infrastructure containing IT and marketing support, right? All food items must be purchased by the franchisee from Mary, and the cost of these are additional to the franchisee fee. So this is something which is not part of your payment. Do you think that there's one more problem in this question, in this scenario? There is one more problem, and that problem is that the setup cost is exceeding the fee. So this means that probably this is which one? This is the sixth part, sixth thing which we need to address in the strategic report, that this the company needs to take care of, that your setup fee should be higher than the setup cost. You should have either you can recover all these costs or you can have the extra benefit, but your fee should not be less than the cost, right? So these are six areas which we have identified in the company's initial information, right? So what is a performance report? Before Medi continues with the next phase of its growth plan, the board has asked you for advice related to performance reporting at Medi. Right? The board wants you to evaluate whether the current performance report, which is in Appendix 1, which it uses on a quarterly basis, is fit for the purpose. Now, what do you mean by fit for the purpose? That's a question, basically. What do you mean by fit for the purpose? Fit for the purpose actually means what is required from the report to explain to the shareholder. I mean, what content should be the part of the report, right? So as we discussed earlier, that mission statement, like what the company wants to do in the long run, that should be the part of your statement. If there's a problem, then KPI of that problem. If there is any expectations from shareholder, that should be the part of your strategic report. So you need to identify whether the quarterly base report is fit for the purpose. The board has instructed you that you are not required to evaluate the performance of any aspects of Medi's business. So this is an instruction which the examiner is saying is giving you that please don't do the performance measure. You're not required to do that, right? You're just required to evaluate whether this report is correct or not. Right. So let's move towards the appendix number 1. Let's see what we can do here. Okay. So let me try to just a second. Let me try to make this bit. Okay. So this is basically what the company wants, right? I have just tried to mention it at the right side. Okay. So this is the performance measurement report, right? Now let's try to understand what is given in this performance measurement report. Okay. So the first thing which you need to understand in this report is the number of years, right? It's quite lengthy report. I mean, if you see the length of the report, it's too long, right? So year to 30th November 2004, 3 and 2, right? So last 3 years performance, and then 2000 after 2004, 2005. So in 2005, quarter 1, quarter 2, and quarter 3. So quarterly figures and the overall figure. So if you want to compare these three figures, you have to compare these three figures with 2005 only. So that's important. Okay, so what is given in this report is revenue, cost of sales, staff cost, ingredients cost, consumable, cleaning cost, cleaning product cost, total cost of sales, gross profit, and gross profit percentage. Right? The gross profit percentage is given here, and after that, Mary franchise restaurant. So what the revenue they are generating from franchise restaurant? You have to see note number 1. Note number franchise fee and income from sale of ingredient payable to Mary from franchise. Right? This is something which is given here. So total franchise fee is given here, right? Sale of ingredient, total revenue from franchisee restaurant, and then cost of sales, which is given here. Cost of sales include ingredient and setup cost for the franchise. Okay. And then setup cost, ongoing support cost, total cost, gross profit, and gross profit percentage. Right? Gross profit till gross profit percentage is given here. And if you see this thing in 2000 and X2, 2000 and X3, 2000 and X4, and then quarter 1, quarter 2, quarter 3, and 2000 and X5, right? So this is basically the number of years. So we don't have any figure in 2002 and 2003. That means they have started developing the website, the restaurants from 2004, right? So this is basically the overall first part of the report, right? And then this is the whole company, right? Whole company probably means restaurants and franchisee both, right? So they have given you overall revenue of 2000 and same 2002, 3, 4, and every year. So revenue is given, cost of sales, gross profit, and GP percentage. Return on capital employed is given here, right? Which has been reduced, and the number of restaurants is given. In 2002, there was just one restaurant. In 2005, the company is having 13 restaurants. In 2002, there was no franchise, but in 2005, the company is having 8 franchises. Non-financial performance indicator, cleanliness is given here, food delivery time is given here. So average ranking is out of score of 5, right? So this is the overall performance measurement report. Okay. So we need to analyze whether few areas which we have identified in the previous part are measured here, right? So what we have identified the company's objective is to maximize shareholder wealth, right? The company must increase the number of restaurants. Then there is a problem in finance. Then revenue growth should be at least 50% revenue growth, right? And this should be like to like revenue growth. Like for example, um, other than, I mean, this is operational growth, growth from your normal traditional businesses, right? Quality of service, and then there was another problem which is setup fee. So there are six major problems which we have identified. And how many marks are for this question? This question is of 14 marks. So we have identified six problems and we have to write for 14 marks. Um, I don't think it will be that difficult to manage to get 14 marks, right? So first of all, you have to make up your mind that there are 6 points and you need to look at the report and identify whether those points are available, whether the company is measuring those KPIs. If yes, then whether they are appropriate or not. If they are appropriate, you have to tell the CEO that yes, these KPIs are relevant because of this reason. If you can locate those KPIs, but you think that they are incomplete or they are irrelevant, inappropriate, you need to tell the CEO why you think so and what can be added, right? So that's basically what we have to do. So let's start with the company wants to maximize shareholder value or wealth. What was there? Wealth. Okay. Right. So how the company can maximize shareholder wealth? First of all, you need to look at where the wealth part is given, how the company is measuring shareholder wealth in this question. The first indicator which is given here is gross profit, right? Gross profit is given here, and then GP percentage is given here, and again GP percentage, and additional data is given. Yeah, there's a first. This is something where which they have identified that get the company wants to maximize shareholder wealth by using return on capital employed, right? Now, we have to analyze whether return on capital employed is a relevant indicator or whether something else can be used instead of that. So first thing is to identify whether return on capital employed is what the company is using for shareholder wealth, that is return on capital employed. So first task is done. What they are using return on capital employed as a KPI. The second point is you need to understand whether this is a relevant indicator or not. Generally, there are three terms, right? Generally, the examiner says that you have to maximize shareholder return. If the question says that the company wants to maximize shareholder return, then we generally move to earning per share or maybe return on equity, right? These are few things which we generally recommend because the company wants to maximize shareholder return, right? Return on capital employed is not appropriate because it's shareholder thing, right? Shareholder thing should be return on equity. Then the second thing which generally they say is company wants to maximize shareholder value. If they want to maximize shareholder value, then generally we say that we use the concept of value-based management, and we say that you can use either economic value added, or you can use, if you are talking about a project, you can use net present value. If you're talking about company, you can use economic value added. Why economic value added? Because economic value added will not focus on short-term indicators like profits and everything, and it focuses on the longer-term value creation. If the question says that company wants to maximize shareholder wealth, right? If the company wants to maximize shareholder wealth, generally we do this by using the share price. And because share value is something which determine the wealth of the shareholder, whether the shareholder wealth has increased or decreased, because that is related to the share price. These are generally three things which examiner generally ask from students, right? Mostly it's maximizing shareholder value. So try to focus on why EVA is important. So in this question, what the examiner is saying is that the company wants to maximize shareholder wealth. So that means we say that, okay, fine, no, why ROC is not an appropriate indicator. By the way, ROC is not. Why? Because it uh, motivates, or you can say divert, managers attention towards short-term improvement, right? So a better indicator would be go for the share price, right? Why share price? Because if share price improves, that's going to improve the overall wealth of shareholder. Alternatively, what you can also write is that the company can use economic value added, because if you are adding value to the business, if you're continuously adding value to the business, ultimately it will have a good impact on your share price. So it will have an indirect impact, but it will ultimately improve the share price. You cannot directly increase the share price. You can do something to increase the share price, right? So these are two relevant KPIs which you can mention in your answer, right? And then you have to write the reason why this is more appropriate, right? So there are 4 points in this whole answer, in the first part of the answer. The first point is the identification, what the company is doing. The second part is the telling examiner why this is not a good KPI, appropriate KPI. Then recommending what you believe should be used, and then writing why you think that it is more appropriate, right? So there are four areas which company needs to address, right? Let me take you to the answer, suggested answer, which I have written just to explain this part, right? So maximization of shareholder value. So this is the first part of the shareholder value, right? So how I have written that? Okay. It seems that MEDI is measuring shareholder value based on return on capital employed, which is current analysis. The problem with the return on capital employed is that it's focusing on accounting profit, which may motivate. So this is the current analysis, right? The problem with the ROC is that it's focusing on accounting profit, which may motivate managers to a myopic approach, which is short-term approach. This is the problem with KPI. EVA can be used because it is a long-term performance indicator designed to measure the value of shareholder, which is our recommendation. It makes adjustment to convert from accrual profit to cash operating profit. Second, EVA makes sure that the cost of capital is being recovered. This is the reason why we believe that this is more important. In this case, it allows capitalization of spending on market building, which such as advertisement, which results in long-term benefits to many. This you can add as a relevancy to the scenario, right? Or if you are writing share price because you are directly wants to measure shareholder wealth, in that case, you can say that, okay, fine, the company should use share price as an indicator. Why? Because share price will show what share price will show whether whether shareholders are confident with the company, what they are expecting from the company. So it also includes some expectations from the company. So if they are confident, if the overall market is confident about the company, its wealth will increase, its value will increase. That you can also write instead of writing this, right? So it's up to you what you are recommending, but you have the most important point is that there are four areas: current analysis, problem, recommendation, reasoning for recommendation, and relevance to the scenario. These things, if you're writing all these things, you will get marks. You can easily get 3 to 4 marks in this from this part of the question. Let's make it on the lower side. You can at least earn 3 marks from this part. Okay. Now let's move to the second part. What is the other part of the question? What the other want to do? Increase the number of restaurants. Now, do you think increase in the number of restaurant is measured here? Yes. Number of restaurants. So the number of restaurants, they are measuring number of restaurants, which means that this is present, right? So the company is measuring the number of restaurants and the number of franchise restaurants. So both are there. That is the first part, right? So you say, okay, fine. The second one is that number of restaurants are available in the strategic report. So this is the first check mark. The second check mark means that you need to identify whether this is a relevant KPI or not. See, problem is, are we seeing anything wrong with this KPI? I mean, do you think only getting more and more restaurants or buying more and more restaurants will serve the purpose, will increase the revenue? This is showing that the company is whether the company is acquiring new restaurants or not, which makes sense, which is the purpose for the of the company, right? So till here, this is fine. But the important thing is that you need to understand how much average revenue they are bringing to the whole company, or what is the average increase, what is the maybe average increase in the revenue of business, or not average revenue, I mean increase in revenue of the whole company after acquiring that restaurant, or maybe average revenue uh, from that from the restaurant, or whatever the measure is. So I mean there should be something which is going to assess that only acquiring new restaurant will not serve the purpose. You must have some other criteria based on revenue, based on profitability, based on customers, something which is going to have a good impact on your on your company, right? So so we say that the company is measuring this, and this is in line with the objective of company, which is to increase the number of restaurants, right? But and then you will say that, okay, fine, it will just tell the company that how many new restaurants they have hired. It will not tell that what will be the revenue increase due to new restaurants, or maybe the average revenue from restaurants, right? Something which is going to make sure that the company is getting the appropriate is buying a good an appropriate restaurant, right? So something which is given in the question We are saying that this is fine, but additionally you need to do this because the shareholder would like to see what impact it is bringing, right? So how I have written that, the method that Medi is using to support the maximum shareholder value in is to increase the number of restaurants through increasing the number of franchise and growth, which is the current analysis. The performance report includes the year-on-year change in the number of restaurants. However, it is vital. You can say, you can write here which is in line with the company's objective. However, it is vital to question the basis for the company, how it is evaluating the franchise potential, right? How much revenue it is bringing, right? And why this is important? Because specifically in a situation, um, because the new franchises are actually cost is exceeding the budget. So maybe new franchise are not. I mean, they need to focus on that first. But I think this can be written later. You can write it at the end of the report where the other concerns are there. Right? So till here, you can say that okay, fine, but this thing should be added. Okay. What is the third objective? So we are done with this. We are done with this. Lack of available finance. This is, so let's write it at the end. Right? We are focusing on what are the core objectives of the company. To achieve like for like revenue growth for at least 15% each year. 15% growth each year. So this is the whole company situation. Can you see year on year growth here? Year on year growth is mentioned here. Is that so? No. Revenue is given here, but year on year growth is not mentioned. So we don't know when we move from 2004 to 2005. Obviously, there's a reduction in revenue. Or when we move from 2003 to 2004, uh, what was the change in revenue, right? So you need to calculate it. That's not given here. So this part is missing. Missing, right? Um, they are saying to achieve like for like revenue growth, right? Um, what is the note number one which is given here? Franchise fee and income from sale of ingredients payable to Medi from franchisee. That makes sense, right? But in this part, the overall revenue is given here. Just a second. जी हाँ है गरम कर दें अगर आप चाहें. Sorry. So they are not telling you whether this revenue is with the sale of the product or it also includes revenue from other services. So there is just one revenue which is given for the whole company. So there is no breakup. Sorry, there is no breakdown of this statement that what I mean. Our objective was for like business, like to like for like revenue. So whatever revenue you have generated from operations of the business, so that is also missing, right? So how you will write this? You will first of all you will say that we are unable to locate this, unable to find. The company is not measuring this, right? And the second thing which we must understand is that it since this is like for like revenue, so revenue from regular activity and revenue from non-operational activity should be mentioned in the report so we can understand that how much revenue they are generating from the regular activity. So that part is also missing there. And how we can write it? Any focus is to ensure that revenue growth is at least 15% despite being crucial information. Revenue growth in terms of percentage is missing from the report. So this is our current analysis. Like-for-like revenue growth for the measurement criteria set by MIDES is also absent in the report. It should split total revenue from the sale of new restaurants and non-operational activities. So recommendation with the reasoning that why we believe that this is something which is in line with the objective of the company, and that's missing in the report. Right? You can further elaborate it, but the point is whatever you are writing, it should be supported by some justification. Right? You cannot just write that this is something which the company needs to mention. No, because why we are saying this? Because this is the objective of company, right? Maybe I have not written it here, but why we are recommending this? Because this is the objective of company to have like to like business, like to like revenue, right? Then what else is given here? So we have identified the first part, second part, third part, and then we are moving towards the fourth part, which is the quality of service, right? How they are measuring the quality of service? They are measuring quality of service because this is the only non-financial performance indicators by using cleanliness and food delivery time, right? They are using two indicators. The first indicator is cleanliness and the second indicator is food delivery time. Now just consider a restaurant, right? You are going to a restaurant and you are the customer. What do you think? Do you think that these two KPIs are the only factor behind your satisfaction? Do you think like this? Just think about it. Are these the only two factors? Obviously, these do matter. I mean, food delivery time matters, cleanliness, ambience do matter. But the most important thing which matters is actually the food quality. What quality of food you are providing, at what price you are providing, how your staff is behaving, is there enough space available? I mean, there are a lot of factors which can be used to analyze whether the restaurant is providing a quality service or not. So we will say yes, we will appreciate these two indicators, right? You have to appreciate that the company is not focusing only on financial indicators, but you have to understand that there are other indicators which are more powerful compared with these two, like quality of food and price. And so there should be an overall feedback. And generally, we know that at the end of every meal, whenever we go to a restaurant, they generally ask to provide with the feedback, right? So that's basically something which is missing here, right? So we can write it accordingly. So what are the four indicators we have identified? Sorry, the first indicator is we need to identify that how this has been measured. We know that there are two indicators. The second thing is whether they are appropriate or not. Yes, they are appropriate. Yes, they are. Yes, these two indicators are appropriate, but they are not fully serving the purpose. So the company can have. So the third thing is the recommendation part. The company can have a complete feedback form which include quality of food, portion size, price, ambience, and everything, right? So these are four things which we have identified, and in every part of the question, I've tried to tell you that look, these are four things which you have identified. First, what you first identify, second, analyze, third, recommendation if you think you need to do so, and fourth one is the telling reason why you are recommending this, right? Try to make this a habit of answering the question, right? Now there were two other areas which were important. Then there are two other areas. The first one is this problem, lack of availability of finance availability, and the second one is the setup cost, right? So finance availability is not mentioned in any part of the question, right? So maybe we can recommend now what else we can write here is that in the heading of other issues, in the heading of other issues, we can identify that the company need to identify the availability of funds to buy for restaurants. Right? The second thing is that since their setup cost is increasing, so they need to mention by what percentage their setup cost was greater than the fee they charge, because that will tell you the magnitude, right? So these two indicators must be present here. So there are 6 problems which we have identified and we have recommended and done with that. What else? Now we are moving towards the other parts of the report which should be mentioned here, right? The presentation side. If you see the presentation, you can put another heading of presentation of report so that examiners know that, okay, fine, they are done with the technical part. Now they are moving towards the presentation part. So the first of all, the most important thing is that this report is too lengthy, right? So the report is lengthy. Lengthy report. What else is here? What else the problem? See, return on capital employed is given here, right? But do we know, is this fine? Is this return on capital employed fine? Or is this less than what should be the company should be earning? I mean, let's suppose the average return on capital employed of the industry is 12%, right? But we are generating 5% return on capital employed. It means we are far behind the industry, right? Or let's suppose the revenue of industry, gross profit of industry is, we are generating a gross profit equals to 33%. Let's suppose that the industry is not generating 33%, industry is generating gross profit which is 42%, 43%, right? So the next thing which is important and which is missing here is industry average figures, industry information. And why we think that this is important? Because it will help company to understand its position. Now, this second part is important to write, because just saying that this is missing will you will not get the marks. But if you're writing with justification, you will get marks. Because if you're saying that, look, you are not doing it correct, why? That's something which I'm not telling you. It's not a correct evaluation, man. That means what? That means, see, we are saying that, look, industry information is missing. Why? Because it's important for you to understand whether you are ahead of industry or behind the industry. Now this makes sense, right? What else we can write here? We have identified, we have calculated the gross profit. So probably operating profit, that should come here. Operating profit is also missing, right? And yeah, and then there's one point here is that you can also write it in presentation that these two columns are completely empty. So you don't need to write 0, 0, 0, 0, 0 here. Instead, you can write just a disclaimer that this runs in 2002 and 3. So you don't need to put these two columns and write 0, 0, 0 here. Right? So franchise business in 2002 and 2003. Right? You can write a disclaimer. Then the most important thing is that in 2004, let me try to change the color of my markup. In 2004, the figures were a bit scary because you had a gross profit of 43%, 42%, and 33.6%. But what happened in 2004? The ROC was good, but what happened in 2004? Right. So 2004 seems to be an outlier. And if you see here, your franchise restaurant, the income which you are generating has a negative gross profit, which is quite scary. Total cost of sale. So this is something which the company must look at. Why this happened. So what comes to your mind is commentary or your narrative for performance in 2004. I mean, you don't need to write a lot here because we are not talking about 2004, but you can write basic reason why what actually happened in 2004 and how we are recovering, because that is important because we are in the recovery phase. I mean, we had a gross profit percentage of ROC of 6% around, and then we are recovering. We had a gross profit percentage of 43%, and now we are recovering. So what actually happened and how we are recovering, that is something which is important here, right? So I think these all these points are too much. I mean, quite enough for you to get 14 marks, right? But you need to understand that why this commentary is important, because 2004 has quite exceptional figures. Exceptional figures in the sense that the performance was quite low, right? So that's basically how you can evaluate the performance of you can evaluate the strategic report, right? Any question? Okay. Now what we are going to do is we are going to first start with, okay, fine. There's one more thing which I should tell you before moving towards the next part is that whenever you start with question number one, right? Whenever you start with question number one, you must start your report with these headings, with these 4 lines and then introduction, right? So if I'm supposed to start with the report, I'm just changing the screen so that um, you will, I can show you how we can do that. Okay, yeah. So whenever you get a requirement, let's suppose we are dealing with question number one, right? We are starting with question number one. So how you can do that? See, just copy these things, Control C, and let's suppose we are here, right? So how you can make the structure of question number one? You can start with to, from, date, and subject, right? This is a standard pattern from ACCA, right? And then introduction. Introduction is something which you should write at the end of the report, because in that case you know what you have written, right? And then this is the first heading. I generally don't delete marks because I just want to concentrate how much I need to write, right? This is the first heading. This is the second heading, and this is the third heading, right? So whatever you are writing should be under this performance report heading, like I did here. You see the suggested answer, you can see that there is a main heading of performance reporting, right? Not like this. Performance, yeah. Performance reporting, and then we have identified that, look, these are the objectives and overall objectives, and you can all, I think I missed that part. You should also write the quality of service, thus quality of service, and there are other things you can mention it here. And then we have started with what is the first objective, what is the second objective, what is the third, fourth, and the other areas, and the conclusion, right? So that's basically how you should structure your answer whenever you are writing it. So now we are moving towards the third part of this question of today's session, right? Shall we take a break or um, shall we continue? Okay, let's continue. Okay, I wanted to do this transfer pricing part because transfer pricing is something which is an important part, and this part actually consider the issue of skepticism because that's something which is generally a concern area of professional marks. Mm, yeah, and then we will see the examiner report, what examiner report has, right? But before that, let's move to the requirement part and see how much we need to write here. It's for 8 marks, right? So 8 technical marks are here. So generally we should come with at least 4 to 5 points with this question, right? Because that's how we believe the marking scheme works, right? So yeah, so the question says that in 2005, this is the C part. I'm not doing B part because that's an easier version. So in case we get time, we will do that. Okay. So in 2005, the first Medi franchise restaurant established in a neighboring country was opened, right? This restaurant is geographically close to Medi's warehouse from where it distributes food items to its own restaurant in franchise in his home country, right? So this is an important point that the restaurant is not too far, it's closer, right? Food items can move freely between the two countries. That means there are no tax issues and there is no tariffs administrative barriers for doing that, right? So you don't have to worry about that. You don't have to pay taxes for that. Medi usually negotiate fixed prices with food suppliers for 1 year. So it is also able to fix the price it charges to the franchises for food items for the same period. So they charge fixed prices with the franchisees for providing the food items, right? The franchisee in a neighboring country, while accepting that it must purchase all food items from Mary, has asked that it can be charged for these at the market price it would pay for the nearest equivalent product in its own country. Now let's read this again. It says that the franchisee in the neighbor country, while accepting that it must purchase all food items from Mary, I mean, they have accepted it that they will buy from the restaurant, right? Has asked, this is a request, that it be charged for these at the market price it would pay for the nearest equivalent product in its own country. Now, what is the request? Request is that take a moment for understanding the request. The request is that what the company wants to do is the neighboring the neighboring restaurants actually wants to mm, charge, market. They want to pay for, they want to pay equivalent for the nearest equivalent product in its own country. So let's suppose we are talking about meat product, right? So what we are saying that, hey, look, we are in Pakistan and you are in probably Bangladesh or maybe India. So we are getting product from India, right? We are. and you are providing us meat product because Medi is supposed we are supposed to buy from Medi, but we will not pay you what you are charging. We will pay you for the meat price, which is equivalent to the price which we can pay in Pakistan for an equivalent product, right? Equivalent product means, let's suppose we are talking about beef. So what beef price are available in Pakistan, we will pay you at the same rate. We will not pay you what you are asking us to pay. The board has asked you to evaluate the franchise proposal. So again, the term evaluation is here. Evaluation means you need to look at the proposal and you need to understand what can be in favor or against or good or bad in the proposal, right? So let's try to understand. See, there can be two parts of this answer. The first part will be those points which will go in favor of charging at local prices, right? What the manager has asked us to. How we can balance the answer? We need to put the other side of the story as well. That why the manager wants to have the local prices. I mean, what will be the bad side? What will be the bad effect of accepting his offer? That's the other side of the story, right? So I'm giving you 2 minutes to think why the company should can go. I mean, what are the factors because of which company may go with this offer, and what factors company should look at before accepting this offer. Okay. So just 2 minutes to think over it, and then we will start. Okay. So what are the factors which are in favor of this offer? Right. Let's move to those points. Right. In the initial part, it was something was given that I think here that part was given. Yeah, there was a point. This point. Let me try to highlight it with a different color so that you can understand. One of these franchise restaurants is located in the neighboring country where the Medi brand is not widely recognized. Right. This is one point which was given in the first part. Right. So Medi is not a recognized product, a recognized business there. Probably they need to build their name in that region. Right. Now, what point we can write if you want to start it. Let's just start with a favor. Favor means that since Medi is not a popular brand in the neighboring country, obviously it will need time to set up. It will need time to build its name there, right? Let's talk about McDonald's, KFC, Baskin Robbins, maybe Albac. These are the brands which are already established. You don't need to tell people that this brand is coming to, if these brands are coming to Pakistan or any other region. You don't need to tell anyone. People know about these. People will go and buy. But if I tell you, look, uh, probably Burger O'Clock is coming to Saudi Arabia. or Burger O'Clock is coming to UK. People don't know anything about that. So you need to first build your brand, right? So probably that's the reason why they need material at lower prices. Prices to be competitive in the industry, in the region, right? To be competitive in the region, right? So that's the first reason why maybe they want to do it, right? What can be the other thing which we write with respect to this part? This part. Since they are close to Medi's warehouse from it distributes the food items, that means there may be some cost savings. So you can pass those cost savings to the franchise, right? So since it is closer to the warehouse, you can there can be some savings which can be passed to the customer, or not customer, being franchise. The third thing is that there is no tariffs, there is no tariff, so there will be no extra cost, right? So these are it's of 8 marks, so these are few things. So we have written what we have written. So the first thing which we have written is this part. Because of this, the company should accept this. Because of saving, company should go with it. So that's basically we are completing the answer. Because there is no extra cost, company can try to reduce the cost, right? What goes against it? That's more important. The first thing we need to understand is, what do you mean by equivalency? Are you talking about equivalence? I mean, why manager wants to have lower prices? Is this really a matter of companies low? I mean, is this really the problem that no one knows about the company and we need to provide it at lower cost, or manager wants to increase its profitability? Is that the reason? We are quite doubtful about it, and that's something which we are talking about, where we are talking about the skepticism, right? So look, what do you mean by equivalency? Equivalency, are you talking about nutrition? Are you talking about flavor? Are you talking about ingredients? In what sense you are talking about equivalency? That needs to be fixed first, right? So equivalency price means, what do you mean by equivalency? Because that will determine how much price the company will charge, right? This is the first thing. What can be the second part? The company, this is the first neighboring restaurant. And if you allow them to charge market transfer price according to the local market, then will Medi be able to handle other neighboring? I mean, if Medi wants to open franchise in some other countries, they will demand the same thing. How the company will handle the situation? Will Medi change its policy if it's moving towards any other country, or whether the company will charge other neighboring countries company will charge the same price as it's charging locally, except for one. That's quite that's quite discriminating, right? So what will be the future policy? Will the company be able to handle other restaurants in new restaurants in other countries? How the company will handle the transfer pricing, right? We can write one more thing. um what other thing which we can write? So something coming into your mind, I just what about the local customer, local franchise? Because I mean, other local franchise, you are charging them a premium price, maybe of high price. They will get disappointed if you are charging lower price from the other neighboring region, from someone from the other neighboring region. If you're charging higher prices, they will be disappointed because they are the older franchisees, right? So apparently, if so, what can we conclude here? Conclusion will be that if the company wants to build a brand and the point is that company needs to penetrate in the market, then it makes sense to charge on lower prices. But we need to look at, but it's extremely important for the company to have a clear policy of what transfer pricing will be for the local franchisees and what transfer prices will be for the external franchisee. So that should be the concluding point. You can write a conclusion and you should write a conclusion because you are supposed to evaluate in this part and there are some things which are in favor and some things which are against that. Right? So that's basically how we can balance the answer. So if you see, let me conclude today's session. If you see the overall policy of overall idea of APM, advanced performance management is not a difficult paper, to be very honest. But the most important thing is how you are writing the answer, how you are explaining your concept. The more you practice, the more you will master it. The less you practice, there will be a chance that you have to repeat it because you are unable to express yourself fully to the examiner. Let me give you a brief idea of what examiner has to say. Right? Let me go back to the performance mark. So they are saying 8 points, 1 mark per point, but point means that includes justification of. Okay, so these are the examiner comments, right? Now this point, these are examiner wordings. Candidates are advised to fully explain their points and not assume that the markers, sorry, let me try to highlight and not assume that markers automatically understand the points they are making. For example, one statement is made. If one statement is made, give justification as to why the point is important and where the relevant. Give an example. Keep in mind all discussions should be in relation to the scenario. There are few, if any, marks for the general discussion on this paper. If you're writing a general comment, general problems of transfer pricing, that what transfer pricing factors, I mean, when a company is moving towards a ex- other country, what should be the transfer pricing policy? If you're writing a generalized answer, you will not get marks, right? Okay, and now this is something which is part C, transfer pricing part. What examiner has to say. Candidates performed relatively badly on this part of the question compared to the previous two parts. Answer was generally very brief, but it is hard to assess whether the brevity of answers were due to time pressure or to the lack of knowledge of the transfer pricing. It is advised that candidates use their time accordingly to ensure all parts of the question can be attempted adequately. Answers were generally very superficial, with many simply discussing the aims of transfer pricing in general. Aims are not required. For those candidates that attempted full answers here must miss the fact that the franchisee was asking for the transfer price to be based on their local market prices and instead discuss allowing the franchisee to purchase good quality locally. So you are writing correctly, but this is not the requirement. That's the most important point, right? So candidates are strongly advised to not only carefully read the requirements but also ensure that they have fully read and understood the relevant exhibits before answering the question, right? So, uh, so that's important. That's how this is. And okay. Mm. Yeah, that's it. So that's the end of today's session. The next session will be tomorrow, same time from 8 to 9:30. Its recording will be available on YouTube channel, so you can have its recording from there. All right. So till then, take care. And if you have any query, just write it to me on WhatsApp. So definitely, I will try my level best to answer. All right. Thank you so much. Take care. Bye bye.